Hi viewers, welcome to my channel. Today I'm going to share with you some of the basics of stock market. Do you not have an idea about what is stock market or how it is running? Well, then this video will be helpful for you to get to know about the fundamentals of the stock market. Well, if you want to know more about stock market or trading, then you can follow this Trade with Tommy channel where you can get regular videos of trading. Alright, what is stock market? How it has begun? Actually, stock market started when the countries in the New World began trading with each other, when merchants started to do huge business. So, it is obvious that they would need lots of funds to invest in that business, right? A single merchant could not raise it alone. Hence, they began to make a way to get those funds from the public. And that process is done by stock market. When you think of a market, what do you think of? Do you think of the farmer's market or maybe the supermarket? And what happens in a farmer's market? Sellers buy their products and you, the buyer, buy those products. So, at a farmer's market, there is selling and buying. Then, what happens in the stock market? Exactly the same thing. Selling and buying, but with different products. In stock market, these products are called stocks or shares. They are actually an investment. That means, if you buy a stock, then you own a share in the profit of the company that issued the stock. If the company is doing well, making profit, then fine. You are going to get a part of that profit according to your investment. In case, if the company doesn't do well, then you may lose your money. Let's see an example now. Have you heard of Netflix? Yeah, most probably all would know. That little streaming service you watch your favorite shows on. Well, if you would have purchased a stock of Netflix when the company first went public, you would have purchased it for $15. As of December 9, 2020, the price was $4.93. If you were to sell your one stock of Netflix, your profit would be $4.82 including the taxes. That's really good for doing absolutely nothing, right? Just all you did was spend $15 when you first bought the stock. Now I want to warn you, not everybody makes money in the stock market. Actually, many people lose a lot of money because they make uneducated decisions and they think they can predict the future. Nobody can predict what's going to happen to the price of a stock. Some things are simply out of control and we don't know if these things like weather, economy, politics, pandemics or any other things are going to make the price go up or down. The stock market is very powerful, so it's an advantage that we understand the basics. So, let's come back to the topic. Well, where does the stock market takes place? In India, we mainly have two stock exchanges. One is BSE, that is Bombay Stock Exchange, and another is NSE, that is National Stock Exchange. So, stocks are handled or exchanged in these stock markets. And these are also called as secondary stock markets. Then what is primary stock markets? Yeah, I will tell you. If a company wants to get listed in these stock exchanges, that is BSE or NSE, then first they have to issue stocks to the public by an initial public offering where the shares are issued for the first time. This is what is called as primary stock market. You would have also heard terms like NIFTY and SENSEX, right? Those both are indices. NIFTY is an index for National Stock Exchange and SENSEX is an index for Bombay Stock Exchange. Alright, what it is index? It is basically an indicator which gives us a general idea about whether the stock's going up or down. The SENSEX is an indicator of all the major companies listed on BSE, whereas NIFTY is an indicator of all the major companies listed on NSE. Well, the SENSEX goes up when prices of stock of major companies on BSE goes up, and it goes down when prices of stock of those major companies goes down. The same condition applies to NIFTY. Alright. As I said before, once the stocks are issued in the primary market, then the company gets listed in stock exchanges which are called secondary markets, and there the trading happens. On the other hand, secondary market is where an already issued stock is bought and sold between shareholders. Hence, the secondary market is the stock market where you can buy and sell stocks with the help of the broker. So, you can't directly buy the stocks from stock exchanges. There would be a broker who buy and sell behalf of you. There are many brokerage companies you can find in India. For example, Zerodha, Upstocks, Allies Blue like that. If you are going to invest in stock market, you can get profit in two ways. One way is by dividends. That is, if a company makes profit, then they will either use it for investing or they can decide to share the profit with the stockholders as dividends. They are paid on a regular basis. The other way you can make profit from buying stocks is by selling their stock for a profit if the stock price increases from their purchase price, like I said before in Netflix example. Alright, that's all guys. I hope that you have understood what exactly the stock market is. But if you want to know more about stock market or trading, then you can click the link I have shared in the description box. And moreover, all the best for those who are going to invest in stock market. Thank you guys, be safe and be healthy.